This is our ferocious family guard dog Doji. She's a 10-year-old Shih Tzu, just celebrated her birthday. Hello active traders, I'm Ken Calhoun with another episode of our TradeMastery.com video for active traders. In this episode we're going to look at some highlights from a recent small cap swing trading webinar I did called Small Cap Domination. What you'll be learning is how to use average directional index as a key indicator for trading stocks under $10. You'll also be learning what kinds of charts make sense to trade and which to avoid. One of the biggest challenges, I remember back in my own trading these things for many years, is finding charts that have consistent uptrends. Because especially true with the cheap stocks is often they run up and down and they're very inconsistent. So that's not good. What you want is charts that have an acceleration ramp or a steady uptrend to work with. So take a look at what we've got to cover coming up next. So hello traders and welcome to Small Cap Domination. If you've ever struggled with trading stocks under $10, it's probably because you're trading the wrong instruments that are haphazard and risky and jump all over the place. But first, as always, all information is for educational use only. I'm not making advice about what to buy, sell, or hold. By watching this, you agree not to make actual trades. We make no profitability or performance claims. It's all for information and education use only. Let's jump right into it. One of the things I promised to tell you was the difference between the pop and drop chart. It's kind of a good statement of the problem that a lot of traders run into, right? Is you get into something that looked promising at the time, only to see it go against you, you get stopped out, and you say, what the heck? What happened? As opposed to other charts that continue to run up. And there is a difference, and there's some very little known patterns and strategies to use. The pattern is a bullish cup, and the key is a 45-degree angle at the right side of the cup pattern, as opposed to a congestion box or a quick thin pop up that then fades back down. What you want is a 45-degree angle the day after a bullish cup is formed, and that will often lead to an explosive upside breakout like we saw here. Because how to use the average directional index for breakout signals on stocks under $10. Also, we'll look at pivots with moving average bounce trades, how to use momentum candle breakouts, and how to trade cup breakouts with small caps. But let's take a look at charts that make sense to trade, because this is the first challenge that you'll face as a trader, especially in cheap stocks. As I mentioned too in all the coverage in my industry articles and money show presentations and channel partner events for all the charting software companies, the trading range makes absolutely critical difference in being able to trade things successfully. So those kind of charts are really stupid, right? What you want instead are charts with a consistent uptrend without any major pullbacks. That's the cornerstone of a professional trading approach. Is number one, tight stops when you're wrong, but number two, don't play these skyrockets that do parabolic arcs that jump up and down. This makes a lot of sense. This guy was 5 to 7. The first topic is points of range, and we like to have instruments with a minimum 1 point range. FI, another good chart, going from 6 1/4 up to just under 8. Remember, we do use whole number resistance, and as I've published in Stocks and Commodities and spoken about for a money show and all over the world, we sell things with a 9 in it. Downer, every whole number increment is a battle between buyers and sellers that you want to look at. So here is 3. 3's whole number support. 4 is the gap point, right? The mid-range. And 5 is the exact freaking top. I want to establish that I am a real money trader. This was from my Interactive Brokers account and $35,000 in it. This is a few years back. MGM stock. I sold at $837 and 9 for $1,200 worth of profit. I made $1,600 on the day. I am a real money trader. I'm the real deal. I do know how to trade and have traded successfully stocks under $10. That gives me the right to teach you. When the ADX, the red average directional index, this is Wilder's average directional index line, breaks north of 40, that generates a signal day. That's a signal day. We don't trade it that day. Odds are you and I, at least I did not see the signal on this day. You can trade the day after, or the day after, or the day after, up to 2 or 3, 4 days after the signal day is generated. But when Wilder's average directional index breaks above 40, I use it as a velocity or a volatility indicator. And I look at when have a red 80x over 40 day, that generates a, hey, this thing should be on your watch list. This is how to identify candidates for your watch list. It's one of the things I use, and I'll be using in my upcoming alert service too. The small candle followed by a large whole row body candle, once it breaks resistance, that usually makes for a good trade. So when you see an increase, a stair-step progression, as I mentioned in a recent YouTube video, where you've got a small followed by a large whole row body candle on increasing volume, especially if it also combines with a cup pattern breakout like this, that forms the right side of the cup on a high volume, high velocity, wide range candle. That's the progression is small candle followed by large candle. Okay, small candle, large candle is good on increasing volume, right? So that led to a nice breakout. So that's another pattern that, just from a momentum trading standpoint, you're going to be on the lookout for. Looking for consistent uptrends. And they are out there. They're hard to find, by the way. It was not easy for me to get this list. Okay, it took me over an hour and a half to get this list compiled for you today. I was scanning after the close today to get this list for you guys today. These types of charts are difficult to find, but they are out there. And has an acceleration ramp, right? A steady uptrend that leads to a 45-degree angle intelligent breakout that's likely to attract new buyers like me, right? You want charts that are strong enough and consistent enough to attract professional traders. It's how to find great trades. I've given you a lot of good pointers to get you started. I hope that you start developing a thoughtful plan with stops, targets, exit signals, a personal trading plan, and take action to make it work for you. So anyway, thank you so much for being here for our first Small Cap Domination webinar for September 2017. I'm Ken Calhoun, wishing you the best. Remember, trade smart, trade with intelligence, trade smartly, be careful out there. You know, trade many instruments, go wide, not deep, and trade for as much money as you can with tight stops. So take care and best wishes for success in your trades. I'll see you in another event coming up soon. Goodbye. And that'll do it for another episode of our trading video blog for active traders. Feel free to leave a thumbs up, subscribe to this channel if you wish, so that you can get updated new videos every week or so. And certainly feel free to leave a comment or question in the area below. I really like hearing from you folks, so if you have any questions or comments about how to trade the inexpensive stocks, particularly for swing trades, feel free to ask and I'll give you a good answer. So until next time, trade smart, trade with real tight stops, try and make as much money as you can and go get them. Best wishes for success in your active trades.